From downtown Milwaukee, welcome to Money Talk with Bob Landis. Each week, professional advisors from Landis & Company Investments discuss the latest financial developments, offering timely insight and long-term perspective.
This is Money Talk for October 24th, 2025. Let's see what's happening. You may have already heard about this, but Aaron Rodgers and the Steelers welcome the Packers to Pittsburgh. The Bucs look to stay undefeated with games in Toronto tonight and Cleveland on Sunday. And Halloween is being celebrated all over town, starting tonight at the Dead Bird Brewing Company. And on Saturday, there's a 5K run, walk, and festival to celebrate the Day of the Dead. That's at the Forest Home Cemetery. And at the zoo, it's not too scary, but it's Boo at the Zoo for the little ones. Let's get started in Scotland, where the Agriculture Development Board recommends farmers bury their used underwear in their pastures. Why? Well, organically thriving soil will eat away at the briefs and leave nothing but the elastic waistband behind, confirming the fields are fertile. That brings a whole new meaning to eat my shorts. And from our favorite whipping boy, Florida, Stuart, Florida to be exact, police had to relocate a thirsty 6-foot alligator that crashed happy hour at a local bar. The suspect was taken into custody without incident. And finally, one of my favorite festivals is happening next March. And I'm just giving you a heads up right now so you can circle your calendar and plan ahead. Frozen Dead Guy Days started out in a small town of Netherland, Colorado, population 1,500. And it drew 20,000 people who would show up and celebrate annually. The Frozen Dead Guy. He was once kept on ice in a shed for 16 years. Then in 2023, our dead guy was moved, still frozen, to Estes Park, Colorado, where the tradition continues with a frozen salmon toss, a polar bear plunge, a costume ball, and the famous coffin races. If you're in Colorado in March, you don't want to miss this. On the podcast today, we have Adam Baley, Joel Dresang, Mike Hoelzl, and wrapping up the week, here's Kyle Tetting.
Well, thanks, Max. A great week overall for markets. A great week overall maybe for news headlines as well. But NASDAQ up 2.3%, closing at the bell at 23,205. The S&P 500 up 1.9% this week, closing at 67.92, closing in on 6,800. The Dow Jones Industrial Average added 473 points on Friday, up 1,017 for the week, closing at the bell at 47,207. That's up 2.2% for the week. For the year, the NASDAQ up 20.8%, including dividends. The S&P up 16.7%, and the Dow up 12.5%. You know, Adam, hard not to continue to take a peek at what we, I guess, fair to say, haven't learned about the economy while this government shutdown drags on. Going to be tough for a Federal Reserve as they get set for another meeting to discuss rate policy, to kind of figure out where things are headed. And yet it feels, at least for now, like the market just continues to rally on what has been a fairly strong earnings season. What kinds of things are on your mind as we kind of get set to look at the Fed again and with everything else that's going on?
Well, I guess with the government shutdown still dragging on, I'm waiting to see some economic news and economic numbers that haven't come out yet. We did get a little bit on inflation. Joel, I'm not going to steal your thunder on that. I know we'll get into it, but we did miss out on the labor market report, and we're trying to piecemeal together some of that information from other sources. But for now, in the absence of some of that critical data, the market has been very focused on the one economic report we did get out, and also some earnings reports that we're starting to get out. Earnings still a bit of a mixed bag, but coming in slightly better than anticipated, also raising some guidance in future months and into 2026. It is good to see the market, at least if we're going to focus on anything, focus on earnings, and I appreciated that.
We've seen some deal making. Certainly some of the non-government data on consumer spending has remained fairly strong. The maybe early concerns about some declining credit quality or some slowdown in the repayment of loans has at least stabilized for now as well. And so I think, you know, we have we've struggled to kind of figure out where precisely is the labor market, where precisely is inflation. And again, I think the Fed has been clear in a lot of their communication. Joel, we did get that CPI report. If not 10 days late, at least we still have it, and it's led to, I think, some bigger conversations as well.
Kyle, that was the Consumer Price Index, and the information had already been gathered when the government shut down on October 1st. But remember, they shut down the Bureau of Labor Statistics, and so they didn't have the people to put the data together and to analyze it and to put out a report until last week. I think they hired some people back and said, put out this report, and then you can go home, I guess. And the report actually was due out October 15th, and it's a big report because that's the report that every year Social Security uses to figure out how much to raise people's benefits for the next year. So there's a mandate that Social Security come out with that calculation by November 1st. So I think there's some speculation that in part that those people from the Bureau of Labor Statistics were brought back so that Social Security could do its job and get those numbers out. And so that number came out today, and Social Security payments are going to go up 2.8% next year. That's about the average it's been for the 10 years before that.
And 2.8, certainly a little bit better number than what we saw last year at 2.5. And, I think something that certainly seniors are pretty cognizant of is, all right, what should I expect coming in year to year? Of course, as we look at kind of the next big thing in line, that October jobs report, where BLS should be out there collecting data right now, and instead, this may be the first time in 6 decades that we are going to skip a month.
That's right. This week was the week that all of the people from the BLS who go out and count noses and analyze payroll data were supposed to start collecting data for the October jobs report, and they're not working. So, and you're right. I mean, it's 6 decades since there's been an interruption like that. And one of the things, getting back to what Adam was talking about with the Fed meeting next week, they've got some very important decisions to make on interest rates, and we don't know what they're going to be looking at because there's less out there for them to look at.
Well, and the Fed has been clear that they are data dependent and they are data driven, and how are they going to be able to make their decisions absent some critical data? So not that they're flying blind, but there are other ways to get some access to it from private sources, but it's nowhere near the gold standard in terms of the labor report that we usually get from BLS.
Yeah, Adam, and remember that the Fed has 2 mandates. One is to have full employment, and the other is to have price stability. Well, they've been concerned more lately about that full employment part of it, but there's also concern about the price stability, and the report that came out today on the CPI showed that it was 3% inflation from a year ago, and that's the highest inflation rate that we've had since January. And again, that's 3% versus the 2.8% that Social Security is going up next year. So there could be some tension there as far as people not keeping up with prices.
Yeah, speaking of prices, we saw some of the prices in core goods, and specifically like food and coffee, jump substantially from the previous month. Coffee up 18%. Beef up about 15%. A lot of that you can attribute to a single country tariff. Brazil, we import a lot of coffee and a lot of beef products. And we have, at the moment, a 50% tariff on Brazil. And September really was the first month that those things started to show up on store shelves after the August implementation of the tariffs.
If the Fed really wants to ask someone about price stability, I do the grocery shopping in my house, so I could tell them exactly what's going on if they really want to know. But you look at, Adam mentioned, like, the beef costs are way up. And I find this interesting. I saw this about a week or two ago, and now it's kind of getting a little bit more national play. The company that is having the biggest resurgence, and it's kind of a little anecdotal evidence about how people are having to stretch the dollar because prices are up, is Hamburger Helper.
Yeah.
And a lot of people are touting that, like, yes, an American staple is back. And I just want to say, that is not the flex you think it is. It is showing that people, like, prices are up, so people have to stretch their dollars to make it work. And so I just found that interesting. The other thing I thought was hilarious, after all of this, just the rampant conversation last year on the cost of eggs, which drove me insane. Eggs are actually down year over year.
So eat more eggs, less beef, or the other one I've seen is the meat substitute businesses like Beyond Meat are now looking at, well, maybe we could do a 50-50 burger that might at least help with some of those beef prices. And so
this is a dream for the cows from the Chick-fil-A commercials.
I think reasonably we are in an environment in which there's still a lot of noise. There's still so much fog kind of hanging over us. And so it's hard to kind of navigate. Again, talking about a Fed meeting next week, it's hard for them to kind of navigate data dependence. Well, the data we do have says inflation's still a problem. That would typically signal we don't want to cut, versus the data we don't have. What's the labor market look like? The little bit we do have shows some signs of weakness here and there, but maybe not enough to otherwise support that cut. And yet the market largely is pricing in this expectation that rates will be cut. I wouldn't maybe go so far as to say you want to bet against that right now, because I think the Fed is still going to lean on the side of how do we keep the economy humming along here. But at the end of the day, it's probably a lot to pay attention to. Joel, we got a couple of other pieces of economic data this week, maybe a few, maybe not necessarily bright spots, but we'll call them spots in what otherwise has been kind of this darkness of economic data.
Yeah, and both of them were confirming things that we've been watching before. One was the consumer sentiment number that comes from the University of Michigan. Basically, not really changed much since September. Consumers are still concerned about tariffs' effects on prices and inflation. The expectations for inflation a year from now are pretty high, but they're not as high as they were right after the tariff changes were announced in April. The other number that came out this week was from the National Association of Realtors on existing home sales, showing that the pace of home sales went up in September, but they're still below where they ended last year, and last year was the worst year for home sales since 1995. So the housing market may be getting a little stronger, but it's still not strong.
Just a reminder that while the government may be shut down, we're still here doing work. And so if you have questions on what all this means for your portfolio, I think tough to answer some of those right now, but longer term, making sure that you're properly allocated, I think that's precisely what we're here for. We always enjoy doing this program for you, hopefully give you a little bit of clarity in these periods that tend to be a little bit less clear. And of course, we'll talk to you again next week.
Thank you for listening to Money Talk with Bob Landis. If you have a financial question you want answered on next week's show, email it to moneytalk@landis.com. To keep informed throughout the week, visit our Money Talk page at landis.com.